Hello and welcome everybody to this conversation on financial inclusion, which we have titled The Evolution of Digital and Financial Inclusion in Africa. My name is Godfrey Mutizwa. First, before we start, let me introduce you to my panelists for this discussion today. That's Raghav Prasad, Division President, Sub-Saharan Africa, Mastercard. Sitoyo Lopokoyiti, he is Interim CEO, M-Pesa Africa. Amolo Ngweno, CEO, BFA Global. And Ken Njoroge, he is CEO, Celluland. Before we start, let me invite Raghav Prasad, Division President, Sub-Saharan Africa at Mastercard.
Thank you, Godfrey. Good afternoon, ladies and gentlemen. And thank you all for joining us today. On behalf of Mastercard and our team in Sub-Saharan Africa, I'm of course delighted to be part of this Forbes Africa roundtable this afternoon. I'd also like to extend my warm appreciation to our partners and friends who have agreed to join the roundtable this afternoon. A big thank you to Sitoyo Lopokoyoti, Interim CEO of M-Pesa, Mrs. Amalo Ngweno, CEO, BFA Global, and Ken Njoroge, CEO, Celluland. And of course, a big thank you to Forbes Africa for providing us with this platform. At Mastercard, we have built our participation in Africa's journey towards becoming an economic powerhouse on two foundational pillars. Firstly, it's our belief that the only way to create truly sustainable growth is for it to be inclusive growth. And we've therefore dedicated ourselves to building a world where everyone, from individuals to small farmers and micro businesses, are financially included and have equal access to a better life. The second pillar of Mastercard's strategy is our firm belief that the economic transformation of the African continent firmly resides on the foundation of digitization. Digital deployment allows, we believe, for the true democratization of financial services. And in a vast geography like Africa, frankly, this is the only way to move forward, to leapfrog old infrastructure models and to drive growth. We've, of course, been dedicated to a strategy of inclusive growth in Africa for a number of years now. Over the past 3 years, we've created a completely new playbook for enabling and scaling financial inclusion in Africa, leveraging low-cost digital channels to financially include close to 100 million consumers in the last 3 years. We're also actively engaged with key market players, including governments and regulators, and some of our friends on the panel today, to support the domestic payment ecosystem in key markets across Africa and actually across the world, connecting telcos, fintechs, and other partners to each other through digital solutions and technology. Having already connected 500 million people to the digital economy over the last 5 years, Mastercard's aim now is to connect an additional 500 million people globally, thereby hitting a number of 1 billion people in the digital economy by 2025. The COVID crisis has demonstrated the power of the digital economy to sustain societies and commerce during times of great adversity. Suddenly, in an environment where face-to-face contact is limited and people are concerned with touching cash and being infected by this deadly disease, digital is the only way to keep financial activity going for consumers and for millions upon millions of small and micro businesses. Unfortunately, it's also shown in sharp relief the extreme disadvantage faced by small businesses and individuals who cannot participate in the digital economy. And we must all, we believe, dedicate ourselves jointly to reduce this number dramatically. Now, the African continent has been a trailblazer in the use of mobile payments and other digital channels to sidestep a lack of banking infrastructure to bring access and inclusion to millions of people. And the launch and growth of digital financial services in Africa has led to an unprecedented increase in the number of people enjoying access to formal financial channels. The continent is now home to more digital financial service deployments than any other region in the world, with sub-Saharan Africa itself having more mobile money accounts than anywhere else globally. In fact, last year in 2019, 50 million sub-Saharan Africans created a mobile money account, representing a 12% increase over 2018, and bringing the total number of users to about 470 million. Mobile network operators like Safaricom, MTN, Tigo, and other players have large subscriber bases that connect millions of customers, consumers, and SMEs, making telcos the most important partners of Mastercard as we jointly aim to connect more people to digital financial services. Fintechs are the fundamental foundational way to scale and deploy at speed across the vast geography in Africa. And that is why, along with telcos, we are partnering very actively with a number of fintechs, including Cellulant, who's on the panel with us today. Now, while we have come a long way, there is still a lot of work to be done. My view is that financial inclusion isn't just access to person payments. That is actually just the starting point. Real inclusion is when people have access to affordable financial products and services that meet their needs beyond person-to-person payments. Being able to do day-to-day transactions, savings, credit, and access to insurance. That, I believe, will be the next generation and the next revolution in digital product availability that will truly drive inclusive growth to the African continent and allow us all to jointly ensure that it achieves its true potential. On that note, let me hand back to you, Godfrey, to take forward the roundtable.
Raghav, thanks very much indeed for those thoughts and for certainly centering our minds on the importance of financial inclusion. I want to compare it in terms of importance to a flight. So this I took off the internet, and where would we be without the internet? So this is what it says. It says every takeoff is a choice, while every landing is a must. In other words, there's no choice. I want to equate the importance of digital to that flight. We have to land. That's how necessary it is. Imagine if we had not developed to the extent that we had when COVID struck. Where would commerce be? Where would people have been in terms of being able to buy essentials for them to survive? It would definitely have been a very, very different world and a very, very difficult world indeed. Luckily, or fortunately, financial inclusion is one of those areas where Africa as a continent is certainly ahead in the world. As we heard from Raghav, we're talking about 470 million people, but there's still a lot more that needs to be included, and we're going to be talking about the strategies of how we can be able to do that. You have heard the names of my panelists today, so let's get cracking. Can I start with you, Amolo, and get your opening thoughts on the importance of ensuring that we're able to extend this to everybody? And I think another word we can use is the lifeblood of every economy in the world today.
Right, the lifeblood of every economy in the world today is micro-enterprise. And I think Raghav already mentioned that the African economies are mostly informal economies. We're a consulting firm working particularly in East Africa, the country of South Africa, and Nigeria and Ghana, where we run both an inclusive fintech accelerator and also an inclusive digital commerce accelerator. Both are called the Catalyst Fund. And what we've really seen with this is the formal sector, although there have been these enormous and wonderful strides that Raghav was just mentioning, the real benefits of the formal sector are not reaching the motors of African economies, which is the informal sector, microenterprise, smallholder farming, and small-scale agro-processing. So the challenge we have already, and I'm really looking forward to hearing from the colleagues Sitoyo and Ken, who have been responsible for developing this wonderful infrastructure.
Yeah,
it's there, but we still lack both the products, the business models, the regional integration, the full tools to make this digital revolution accelerate and incorporate these informal sector businesses and make them the drivers not only of the current economy, but of that leapfrogging economy that we're all looking forward to in the near future. And I'll just make maybe two more comments on that. One is the path we've already trodden is really remarkable. It is already leapfrogging. There are enormous gains already being achieved or realized by people, especially in urban areas, but also smaller towns and peri-urban areas. And the opportunity in front of us is also enormous. We have a huge youth population, and they are the digital natives. Yet we shouldn't be overly optimistic about what they already know. There's a big task to bring them fully into the digital economy and allow the whole continent to really accelerate from this point forward.
Thank you, Amola. Can I come to you, Ken, and get your opening thoughts just in terms of the importance of financial inclusion from your perspective? Ken, can you hear me?
Yes, I can hear you, Gilbert. Sorry, I went off video. Yeah, I think Amolo and Prasad have said it. The financial inclusion, African economies are generally connected.
Sorry, Ken, can I ask you to put on video? Okay, so while we get Ken to put on his video, I was going to leave M-Pesa for last, but let me go to M-Pesa and ask Sitoyo the same question. But I guess I am talking to the already converted here. Sitoyo?
Thank you, Godfrey. And I think what Raghav said and Amola said are quite key. When it comes to financial inclusion, well, M-Pesa, especially in Kenya, has been at the forefront of driving financial inclusion. When M-Pesa started in 2007, financial inclusion was at 23%. Today, as reported by the Central Bank of Kenya, it's in excess of 84%. But I think it's really important that when we look at financial inclusion, we look at financial health. So while financial inclusion has grown, financial health in Kenya has stagnated at about 20%. And this is something that Raghu said, what is the next level of how do we drive financial health, and what other products and services do we add to broaden financial services and access to financial services? So in Kenya, in 2007, there were 5 million bank accounts in Kenya. Today, there are over 40 million bank accounts, and this largely due to M-Pesa enabling customers to actually open bank accounts electronically. And this was the big transformation that happened in 2012. At the beginning, we did offer basic financial services. That's just send money home, pay a bill, move money to your bank account, move money from your bank account to M-Pesa. But from 2012, we began to offer savings propositions, credit propositions, and this we've continued to expand it to until last year when we actually launched the first contextual overdraft product, which has been one of the most successful products in terms of M-Pesa. And it was interesting. We were looking at we Googled it, and the first overdraft ever done in the world was in 1728 by the Royal Bank of Scotland. But contextual overdraft on mobile money was done by Safaricom M-Pesa last year. And you see the importance of how savings and credit does make a big impact to the basic lives of millions and millions of people across Africa. Just to give you an example, there's a lady who lives in the slum area. She wakes up at 3 a.m. She takes a loan of $5 to $10. She goes to the market, buys food, goes to a construction site, cooks the food, sells breakfast, lunch, and she's able to repay the loan and feed her family in the evening. That lady, today, we did a study on her. She employs 5 other women who do exactly the same thing in her company. And today, that group of 5 women support over 24 children and the extended family. So it does show the importance of mobile money and the collaboration between partners in the financial sector to deliver at scale, replicable, and and in a way that is easily as the mobile phone and via SMS or USSD.
Yeah, well done to you guys. Well done to you guys for those many firsts. So I wanted to understand from you, Sitoyo, when you look at the phenomenal growth that we have seen on M-Pesa, would you attribute it just to the efforts of the company, obviously, to get customers for commercial gain, or have you also seen the contribution of the authorities here? And I raise that issue because I see that during the pandemic, the government waived charges on sending money of up to 1,000 shillings. To what extent have you seen a difference being made by the regulatory authorities?
Thanks, Godfrey. I think the first thing is the for Safaricom and M-Pesa, we're a purpose-led company. So our purpose is to transform lives. So all the products and services that we roll out are designed to make an impact into the society. So the regulator, and in particular the Central Bank of Kenya, has been a great enabler of driving financial inclusion in the country. The regulator, led by Governor Njoroge, they have enabled us and facilitated the industry to innovate. We do have Ken on the call, and the regulator encourages the fintechs. We did have a fintech conference in Nairobi hosted by a regulator last year, and we engage with the regulator, and they have the same purpose of ensuring that we use this technology for the betterment of the country. While COVID has been a catastrophe in terms of health and the economy, but in terms of financial services and financial inclusion, it has accelerated that approach. The regulator, we worked the regulator to reduce the transaction fees of below $10 in Kenya, not only for P2P transfers, but also bank to M-Pesa and M-Pesa to bank. But and what that has seen is there's an increase of about 30 to 40% activity within the M-Pesa ecosystem. We've seen customer growth, we've seen transaction growth, we've seen value growth, and we've seen the drive to cashless, like what Raghav said. It has been an accelerator to the digital drive towards cashless transactions. But I think, when you're looking at COVID, there was the response, what you've talked about. This is what did we give out and what did we do with the regulator? But I think now we're working also with the regulator on the rebuild phase as the economy grows in. So we are looking at SMEs and micro SMEs, as Molo talked about. How do we provide capacity building? How do we provide working capital? How do we provide the tools and services that can enable the SMEs and micro SMEs? Today in Kenya, we have over 200,000 SMEs and 5.4 million micro SMEs in so how do we get these SMEs back up, because they're the ones who employ majority of the population.
Absolutely. Absolutely. Thanks very much for that testimony. Let's see if we can connect again with Ken and also get his experience, because from what I'm hearing from Sitoyo, Ken, you're a product of the innovation that we have seen coming through from a regulator. Bankers are notoriously conservative people. Ken, can you hear me?
I can hear you, Gilbert. Yeah.
Go for it.
Yeah, I think what we've seen with central bankers in most of the countries we operate, we see the central bankers, including Kenya and Central Bank, very supportive to innovation. And there's a heavy drive to government digitization. There's a heavy drive for financial inclusion as key drivers of African economy, service delivery, and so on. And this is true in all African countries we've been, without exception. And I think the result of all of this has allowed a very vibrant fintech ecosystem. I mean, we are about 16 years old. We are about 10 years into fintech. Very long partnerships with M-Pesa, very strong and recent partnerships with the likes of Mastercard. And in between that ecosystem, there is all kinds of companies like us that are serving different niches across the various regions. I think by my estimate now, it's maybe about 400 fintech companies The concentration, the really large ones.
Is that in Kenya? Is that 400
Sorry,
fintech companies in Kenya?
No, across Africa.
Across Africa, thank you.
Across Africa, yeah. And roughly about half of those are payments centric. But basically every corner of the financial services basket, from savings, lending, peer-to-peer payments, merchant payments, and so on, is generally covered with a vibrant set of startups that are trying to innovate in different areas.
Yeah.
And this is good, and you can see this with the amount of increasing venture capital that is going into the sector. And I think this is a very, very important mix, coupled with the heavy lifting that Raghav and Mastercard are doing in sort of laying out the basic infrastructure.
Okay, we appear to have lost Ken. I knew he was about to get his thoughts on at least the kind of cooperation that they've been able to see from an authorities. Raghav, come in, because I also wanted your opening thoughts just in terms of its importance, but importantly, I think, from your perspective, how do we move from where we are?
So, look, the most important thought that I would put out there is that the opportunity and the challenge is so large that no one entity or one participant from the market can solve this. This is one where we all have to put our hands together and push and drive the ecosystems to accelerate the transformation. Just picking off what Ken and Satoya talked about in terms of the regulators at one end, we've found, whether it's Ethiopia, where we recently, as you might have seen in the press, we've just recently signed an MOU with the Ministry of Digital Transformation and Innovation, which reports directly to the Prime Minister, to actually help drive Ethiopia's 2030 agenda for digital transformation. We've worked with the government in Nigeria. We've done a lot of work with the government in Tanzania, where, I don't know if you're aware, but we've actually launched digital payments through QR, which is the kind of, the cheapest form of bringing payments to the market, to the extent that boda drivers, for those who don't know what a boda is, it's a motorcycle taxi, right?
I'm an African, I know it.
Boda drivers are accepting payments digitally now, rather than having to deal with cash, right? On the West Coast, whether it's Ghana, whether it's Senegal, Cote d'Ivoire, everywhere we go, governments are welcoming digital transformation with open arms, because they see that is the fundamental driver for growth. But it's not just the governments. Actually, it's powerhouses like Safaricom, like the other big telcos that have, if you look at Africa, banking accounts versus mobile money accounts is like a ratio of 1:20 in markets, right? Therefore, if you want to scale, you have to find partners that have access to those consumers. It's players like Cellular and other fintechs that we partner with, who are driving innovation at a pace that is world-beating, right? And then, of course, there are thought leaders like Amolo and her consulting firms that are helping change the dialogue and take it to the next level. So it's what we are finding is, as we all come together and drive the conversation, it's starting to snowball and gather momentum.
Yeah, absolutely. Amolo, if I can come to you. So Raghav says the opportunities as well as the challenges all can best be described by one word: enormous. So let's talk about how we overcome those opportunities, those challenges, because I think in terms of the opportunities, certainly we are seeing within the private space huge efforts being made to try to take advantage of them.
Yeah, so I think that the scale is enormous, but the rapid progress of the last few years and the acceleration we're seeing under COVID has really demonstrated that this is an opportunity for leapfrogging. I think there has to be some combination of a solid business proposition for providers and a high value offering for customers. So I think M-Pesa was exactly that in its moment, and it's obviously, its moment hasn't ended, but it's the underpinning of the whole digital commerce expansion that is now taking place. And we expect that customer habits are going to be somewhat changed, even if we get the vaccine and COVID disappears quickly. That people will have discovered that digital methods are trustable, they're convenient, they're successful, and that we'll really see an acceleration. And it's not only for the digital commerce part or the financial inclusion part, it's really that digital commerce generates economic activity and jobs. And so we want to see that micro, small, medium, and large enterprises all really get a shot in the arm. And they were already growing before COVID. It's not that they didn't exist, but that they would really accelerate. And they'll accelerate particularly where the mobile money infrastructure is already well developed and people have the habit of using it.
Yeah, Raghav also spoke about partnerships. And I want to try to understand what sort of partnerships we're talking about here. Can I keep it with you, Amolo, and then we get others' thoughts as well?
Yeah, well, especially when we talk about digital commerce, there's a whole infrastructure that has to exist.
Yeah.
So we've just been talking about the payments. There's a financial infrastructure that allows micro enterprises to run their businesses. There's credit, there's savings, there's insurance. And then there's all of the logistics infrastructure. And I think part that we often underrate is the trust infrastructure. How do I know that I am buying or selling from someone who's trustworthy? And that's one of the functions that the e-commerce platforms provide, is they facilitate that trust and understanding. But also reliable government ID with a digital lookup is very successful. And it's one part that's really missing from the inter-country regional or international trade aspect, is that it's very hard to have that trust infrastructure, although ratings and reviews are part of that.
I want Ken to answer that question. I'm hoping that he is back. Ken, I want you to confirm that you can hear me. I'm hoping Ken can hear me. Can you hear me, Ken?
Loud and clear, thank you.
There we go. You want to finish your thought, and you want to contribute to this about this issue of how we can trust the systems that we are using. We have seen here in South Africa piloted a system wherein as an individual you can walk into a bank and also collect your ID card.
Yeah, I think it's a good question. I think to accelerate growth of digital, there is just a lot of pieces that need to come together. And a lot of those pieces are already in place. If you look at the work that Mastercard and M-Pesa have done, they've created a basic foundational infrastructure at scale. And that needs the kind of brand credibility, it needs the kind of investment that only the likes of Mastercard, the M-Pesas of this world can actually do. And that then needs to be combined with a couple of other things. So Amolos talked about the trust infrastructure. Governments are very important in providing access to ID card systems, providing and making this open so that financial service innovators and product builders can actually tap into this to be able to, for instance, authenticate people and so on. And then there's a innovation infrastructure, which includes just the partnership frameworks and so on, that the large infrastructure providers, Mastercard and M-Pesa, and both of them are fantastic partners, by the way, to allow the slightly more nimbler, much more focused, niche-focused fintechs like us to be able to develop offerings for different segments, and different product segments solve different problems in the market. And I think one which cannot be forgotten is basically the capital outlay that is required. If you look at how much Mastercard is investing, how much M-Pesa has invested to create the infrastructure, you have to look at magnitudes of that investment continuing in the years to come into the fintechs and so on. And this has changed substantially. I mean, if you look at the market, there's a lot of fintech deals, there's a lot of fintech investments that's been growing year over year. My sense is for that to get to critical mass, I think we need to get to a point where fintech financing is to the tune of maybe $5 to $6 billion a year. to be able to just create that bucket of new services and new growth that is required to take us from the 470 million mobile money accounts to close to 1 billion over the next few years.
Yeah.
And then along with that, just the usage, right? Not just the access to basic services and the P2P. Raghav made this point very well, that we can migrate those services into mainstream uses in the economy.
Yeah. Raghav, you may want to talk a little bit about the partnerships as well, but I also want to go back to the issue of the infrastructure that's required for us to be able to effect this.
Yeah, well, both Amolo and Ken have very eloquently spoken about the partnerships. So I don't want to belabor the point, except to say that this is an outcome that can only come when everybody up and down the value chain, from the regulators all the way to the smallest fintech, come together with one objective, which is to transform the economic landscape and to digitize transactions. In terms of the infrastructure, it's an interesting point. We have, of course, as Ken mentioned, invested a very significant amount of money in helping build the acceptance and payments infrastructure in Africa. But we've also come to the realization, Godfrey, that the old playbook that's been used around the world of a $200 terminal and a $3 piece of plastic to drive payments is not feasible to use that playbook in Africa in order to scale.
Yeah.
And therefore, we've actually started about 2 years ago down a completely different road, which is to create infrastructure which is low cost and allows people to use devices that they already own to be able to do payments. And that was the start of the development of our QR-based payments capabilities. In Tanzania, we launched this in Tanzania in 2018.
Yeah.
And we worked with all three networks. So Vodacom, Safaricom was there, Airtel is there, and Tigo. And in partnership with these three, and in partnership with a local fintech, Celcom, we were able to enable 23 million consumers in a matter of 6 months.
Sure.
To be able to use QR payments. And what do you need for QR payments? Just a QR code, which could be printed on a piece of paper. And the way we've created the technology, it doesn't require you to actually have even a smartphone to scan. You can actually use an SMS-based capability to do the payments. So suddenly, like I said, you've got Boda drivers who are able to accept, and you've got individuals who are able to pay for items that cost 20 cents, 30 cents, or less, right? So the infrastructure conversation is of course, we need the standard infrastructure, but it is also about innovating and finding new ways to roll out capability that is at low cost and can be scaled at pace. That I think is the critical bit. And if I might just go back to one point that Amolo made about digital transactions, I think the one thing that we must think about also is that digital transactions, most importantly, generate data, generate information. And that data and that information can be transformational. So, to give you an example, in Kenya, we launched a program about 2 years ago called Jazaduka, which is basically an innovation we created in our innovation lab in Nairobi, which allows a micro business to digitally buy from a large supplier the goods that they use in their shop. And because the transaction is digital, a bank can now keep track of the transactions, the turnover that this shop has, and on that basis, start to make available micro loans for working capital. And that, as we know, working capital is the lifeblood of a micro business. That's what allows them to grow, right? That's where the transformation happens, right? In Tanzania, with the National Microfinance Bank, with NMB Bank, we are working on a program which allows small farmers to actually digitally buy and sell their crop with buyers, right? Now, because they can do that on a digital platform, that data can now be used by NMB to actually start offering loans to micro farmers to buy fertilizers, buy seeds, and to be able to actually grow their business. So it's really transformational in terms of the impact it can have on an economy.
Absolutely. So you speak about scale, you speak about innovation, which are all very important things. And also, of course, this is in the age of the Africa Continental Free Trade Area. And a milestone that many people have said will be transformational for African business and also for, hopefully, financial inclusion for SMMEs, because one of the big problems that we've always found is that, of course, while we talk about increasing intra-African trade, SMMEs do not have the ability to be able to cross borders and do these things because they do not, one, have the infrastructure, and secondly, they certainly don't have the resources. Therefore, innovation on this front, very key. Amolo, I want you to come in here and how we marry.
Great, because I wanted to oppose your comment that small and micro enterprises don't engage in cross-border trade.
You're not allowed. You're not allowed, Amolo.
I am. I'm opposing your comment. I think small and micro enterprises actually are very much engaged in cross-border trade. Certainly, we've seen that in our research in both East and West Africa, and some of the mobile money providers are facilitating that with cross-border mobile money payments. But I do think this is a major area that does not only need attention, but the Africa continental free trade area is a light in, I don't quite want to say the distance. It's not yet. We haven't seen the benefits yet. I think there's a lot of work to do to ensure that those benefits actually do reach small scale traders and cross-border sellers, who are some of the first adopters of digital platforms and digital payments, for the reason that handling cash, dealing in cash, trying to meet your customer, all of those issues are difficult or impossible over a distance. So I think it's an area of particular opportunity and should be a major focus. The smaller scale, informal type of regional trade.
Yeah. The point I was making was that, of course, they do not have the resources of the big players who are able to trade under the current system. And unless you're able to extend the financial benefits that are being brought in by this new technology, they will not be able to access the advantages that we're talking about that should be brought in by the Africa Continental Free Trade Area. I want thoughts of others as well on how we can accelerate financial inclusion in the age of the Africa Continental Free Trade Area. Anyone who wants to come in?
I think if I may just step in and to support what Amolo mentioned about
against me,
small and micro SMEs operating cross-border. I think it's we've seen that when we've integrated our solutions across multiple players. So we are fully interoperable with Airtel, Tigo, MTN across our footprint, and what we see is a lot of flows from micro SMEs as well as from SMEs cross-border. I think the importance of the technology and scale is on reducing the cost of transacting cross-border. So this is normally measured around 10%, the cost of transferring funds. We've dropped that down to about 2% and are looking at dropping it even further. Today, there's a lot of inflows that come in from the diaspora into our markets. Examples like in Kenya, over 50% of total remittances terminate on M-Pesa. But what we're seeing is a big need with digitization for our consumers to trade out also. So we've gone into partnerships such as with PayPal, we've gone into partnership with AliExpress and Financial. Yesterday they had the 11/11. And if you look at our transaction volumes that just went to small and micro SMEs buying in AliExpress and coming and reselling in Kenya, is great, but there's still certain barriers that we need to overcome, and here's where the regulators can come in and help small and micro enterprises move goods and services more freely, as well as the areas on FX and cross-border charges.
Yeah, I was actually going to ask what those impediments are to trying to accelerate that, but I want to add to that question as well and talk about the issue of scale. Do we need here perhaps the involvement of players such as the African Union? Because of course we know that AfCFTA is the brainchild of the African Union, and to what extent and what role do they play on that front? I'm aware, of course, of efforts that have come through from players such as the Africa Export-Import Bank and the African Development Bank in trying to ease some of these constraints that we're talking about. Do you want to pick up on that, Ken, or do you want to continue with that, Sitoyo? Anyone?
Yeah, I think the role of African Union is basically to harmonize policy, right? And I think the spirit for digitization, the spirit for trade is there. I think there's a huge opportunity for the African Union, African Development Bank, Afrexim Bank, to coordinate just harmonization of the regulation across markets. There's different regulators that are doing different parts of the implementation very well. I think the biggest opportunity is to pick some of these best practices and basically create a coherent regulatory framework that central bank has in different countries can copy. I think the biggest challenge we see now is that as we operate across borders, and so today we provide services across 34 countries, but we have teams on the ground in about 11, is that we have to navigate different regulatory nuances in different countries, different licenses, and so on. I think that in sort of very direct terms, African Union can just take all of those things away and just create a single framework. I think that would be a significant accelerator because the basic infrastructure is there. The large infrastructure providers are already across markets. There are a lot of fintechs also that are already regional in that sense, like ourselves. I think that would be a direct piece that they can add value.
For sure. I want Raghav's thoughts as well on the AfCFTA and about how, from a Mastercard perspective, this can be a real opportunity and the many benefits that many people are talking about can be realized.
Well, I agree with Ken. I think the biggest advantage of trade agreements like this is an harmonization of policy and harmonization of regulations. The African continent is alive and jumping with innovation. And I think if we can find a way to scale that innovation and allow it to flow cross borders, and cross-pollinate across geographies, that is what is going to make a significant difference. Because remember, the most important long-term requirement for any innovation to succeed is the ability to scale. And if you restrict innovations to small geographies, inevitably they either then need to be subsidized or they die. So an environment that allows the scaling of innovation, allows the scaling of infrastructure, payments infrastructure, allows for interoperability, allows for making sure that we don't create islands of payments in geographies, but rather create an infrastructure that can flow right across the continent. That, I think, is the fundamental recipe for a breakthrough in the rate of growth. Look, Africa, with its population, with its innovation, with its capabilities, with its people, will no doubt get to its goal of becoming an economic powerhouse. Only question is, can we accelerate that? And I think trade agreements like this and policy and regulatory frameworks that make it easier to do business cross borders and across markets will allow the acceleration of that goal to happen.
Yeah, and I think happily at these times we can certainly say that we have a political leadership that recognizes that importance and how it ought to be accelerated given the speed with which the Africa Continental Free Trade Area itself was reached. I was reading somewhere today that Nigeria has certainly also approved the FCFTA, and therefore now I think we're sitting at about 29 countries. Certainly this thing is going to fly come January 1 next year. Let's open up the debate to the floor for questions. We have a number of questions that have come through from people who have been watching our webinar. The first question is, as access to credit is facilitated via digital tech platforms, what will be needed to ensure credit health? I am throwing it to all of you. Whoever wants to pick can raise their hand. We're back in class. Amolo first.
I think it's quite a thorny problem. The digital lenders have arisen because people in the really recent past could not have any access to credit. And I think we tend to underestimate how important even very small amounts of money can be to low-income people or people who just don't have that access. And in our research, we've seen, I think Raghav mentioned that working capital is the lifeblood of small business. And an individual who can't pay for a doctor's visit in the middle of the night or school fees, those digital lenders have been a lifesaver. And that's a substantial contributor to resilience. Yet, it's obviously clear that at some point, it's too much. The interest rates are too high. And for certain people, it's, I think somebody in the comments had mentioned, it becomes like a Ponzi scheme. And I think this goes to the question of what is the appropriate role of the regulator? And I think it's not a very straightforward answer. What is the appropriate role of the regulator? Because they need to stimulate innovation. They need to ensure that there is credit in the economy, even for small scale and low income people. And yet at some point, it is too much. And what is that point? And then what do you do are really not straightforward questions.
Yeah, it's a funny question, isn't it? I mean, how do you manage innovation? Because by its very nature, it seeks to kick out against the boundaries. I saw Sitoyo, your hand was also up.
I mean, this is a great question, and we do get it a lot because our platform, M-Pesa, is used as a distribution channel for digital credit. And today in Kenya, there are over 60 digital lenders in it. I think we need digital lenders all need to be responsible. Our products and services are more savings-led credit propositions as opposed to a credit product. Because credit is unregulated, there's a lot of money flowing in from outside the country for quick fintech startups in lending. And it is actually, as Amolo said, there's predatory lending, and we're seeing the regulators starting to talk a lot about it. In M-Pesa, what we're trying to do is drive a savings-led credit proposition, and the more you save, then you get access to credit. We're also looking at a universal credit, such that if you're in our ecosystem and you are entitled to get, let's say, $500 of credit, then even if you borrow from somebody else, then it's within that universal credit limit, rather than today, I'm evaluated by 60 lenders, or at least at 100 shillings. So now I'm over indebted, and then I'm borrowing to pay. So this is something that as an industry, we're working on with that. We're working with the regulator. But I think it's important, what Amolo said in terms of the importance of microcredit to the lifeline of the economy. And we need to provide that, but in a responsible way, in a cost-effective way, leveraging on technology, continuously ensure that it is sustainable.
Actually, that was a follow-up question from one of the listeners as well. They were asking about how you manage the health issue in the fintech world, and I think you have answered that in part. I'm also would like to go to, we have been joined here by Her Excellency Rachel Ruto, who actually wants to ask a question to you panelists. Ma'am, I'm hoping that you can hear me. The floor is yours.
Thank you so much. The question I would like to ask is concerning the costs, because I'm involved in financial inclusion through Joyful Women Organization, and recently because of COVID-19.
We're struggling with that line. We're struggling with that
Yes,
line. But okay, let's try again. I can hear you. Can you hear me?
Yes, I can hear you clear
So I
now.
heard you where you were talking about the issue of cost and the fact that you're working with women's organizations. Go on, ma'am.
Yes. Yes, I am involved with financial inclusion in Kenya. And because of COVID-19, we are very excited to go digital because we have been transacting through digital. But I would like just to ask the question in regards to the costs. And of course, I know Sito is here from M-Pesa. We've been dealing with M-Pesa. How possible is it for us even to bring the cost down, especially because we work with rural women that may not really afford these costs? That's my question.
There you go, Sitoyo. Thank you, ma'am.
I think it's a good question, Madam Rachel, and great to see you. I know we've met. The issue of cost is something that we look across the business, and in certain projects and special projects such as what you're running, then those we can always have a conversation and build specific products around women and women empowerment. I just want to pick one thing that on what Her Excellency has just mentioned, and this is financial inclusion is for all. So yes, we do look at women empowerment. We do look at the youth, as Amolo mentioned. But today in Kenya, 1.4 million Kenyans are visually impaired and are registered on M-Pesa. So how do we provide products and services that enable that? And in this one, we've worked with Mastercard and fellow partners to actually look at how do we ensure that either through voice recognition, we launched last year a Dot Braille Watch for visually impaired. So we need to look at those communities that we think we can make an impact. And as we said, we are a purpose-led organization, and it's purpose, people, and profit is what follows. So, Madam Rachel, I think the last bit is profit. We need to focus on the purpose and the people, and then the rest will happen. Thank you.
Sure. Thanks very much indeed.
Thank you too.
Anyone else wants to come in? From my panel? Okay, we move on to the next question. All right, here goes. Is there enough thinking around how to manage risks across the financial sector, banking and non-banking? Certainly this is a pertinent question because, and I think it's allied to the question around financial health. Who do I throw this one to? Let me go to Ken. Ken?
Yeah, thank you for that question. I think that's an interesting question because, the backbone of financial services is really trust, right? So risk management is a very important driver for trust of a long time. And the biggest challenge, I think, it's always balancing, risk and innovation, right? And it's a little gray area. And I'm reminded of a very interesting story, during the early beginnings of M-Pesa.
Yeah.
And I think the thinking then at the time, I think was a central banker that said, look, their thinking was that you can't regulate that which you don't know. So you need to let it go to the market. You need to figure out what kind of animal it is. We say, what kind of cat is it? Is it a lion? Is it a tiger? Is it a cheetah? You need to figure out what it is before you figure out what risks it brings and how to manage the risks. And I think there's a lot of thinking going on in this area, not fast enough, frankly, but the thinking of regulatory sandboxes and this kind of thing. I think this is a good approach, but I always sense when we look at our consumers and how they're consuming services, in this sector, I tend to think that, in a traditional sort of innovation cycle, you had corporates, they do R&D,
Yeah.
determine what will work in the market, and then figure out how to market it and how to educate consumers.
Yeah.
I tend to think that because of the level of digitization and so on, it's the reverse in Africa. So consumers are already demanding for services. We got to figure out how to get those services to them,
sure.
and then we have to figure out how to build them. So
Yeah.
when you
Yeah.
think about that from a risk perspective, there's a lot of work that needs to be done to figure out how to drive that balance.
Yeah, and it demands a lot of flexibility as well as agility from the central bankers and other regulators, isn't it? I've got a few more questions that I want to put out to our panelists, so let me try and go through as many as I can in the short time that we have, about 5 minutes or so. All right, here goes. Do you have any statistics of the shift from cash to card struck digital as a result of COVID? That might be difficult. And particular sectors that have seen the biggest shift. I guess that could go to M-Pesa, Sitoyo, that could be yours, as well as Raghav, that could be yours as well. Can I begin with you, Raghav?
Sure. Well, the shift is still continuing, so it's a little early to be able to give statistics. What I can tell you is we have certainly seen a doubling of the rate of growth of e-commerce transactions, for example, right? The desire to be able to do transactions in a non-face-to-face way has exponentially gone up. What's also interesting is that a lot of merchants and shops that in the past didn't want to accept digital payments because they, for some reason, thought cash is their friend because it's cheaper. It's they don't have to pay anything on it. They don't also have to sometimes pay taxes on it, etc. Those people are now queuing up to actually sign up for these transactions. So at this stage, what I can say is we are seeing a significant growth in digital transactions in, as what we call, not present conditions.
Do you think we'll ever kill the king?
Sorry?
Do you think we'll ever be able to kill the king? Cash is king.
Look, it's I don't think cash will ever go away. There will always be a certain amount of cash in the economy. The important thing, however, is that everybody is starting to recognize the cost of cash. Everybody seems to think cash, a lot of people think cash has no cost. Just the sheer cost to a government of printing cash, storing it, transporting it, for shops to be able to take it to the bank every evening, for tax revenues to go by the side. Those are costs that are actually very significant. In fact, our research around the world, we've done it across 60 odd countries, is that the cost of cash, Godfrey, is about 1.5% of the GDP of a country.
Sure.
And that is a very significant number. And so, I think cash will never go away, but it will certainly over a period of time. And, the current scenario has accelerated the movement away from cash very significantly. And we'll start to see digital payment habits change forever, I think.
Absolutely. Unfortunately, time has been taken away from us, but I would like to thank all of you, lady, gentlemen, and all those people who have been watching this debate around the evolution of digital and financial inclusion in Africa and the difference and the acceleration that we have seen under COVID. And I'm certainly hoping that you got some insights into it. As for the questions that have come in on the platform, we'll try and see if we can get all those answered. And thank you for sending them in. A special thanks to Sitoyo Lopokoiti, Interim CEO, M-Pesa Africa, Amolo Ngweno, CEO, BFA Global, Raghav Prasad, President, Division President, Sub-Saharan Africa for Mastercard, and Ken Joroge, CEO, Cellulant. Thank you for your time. Thank you for your insights. And to all of you who have been asking questions and all of you who have been watching silently, we appreciate your time as well as your attention. From all of us here, it's goodbye today.